This is The Bottom Line. The Bottom Line on 938 Live.
Now, Singapore will be releasing the Consumer Price Index, or CPI, for March tomorrow, and economists expect prices to have picked up following a 4-year low in February. According to a Reuters poll, CPI in March probably rose 1.1% on year, following a 0.4% increase the month before. For his analysis on consumer prices and also the industrial production data that's due this week, we're joined by P-K Basu. He's Chief Strategist at Economics.com. Good morning, P.K.
Good morning.
Now, P.K., which area of consumer prices do you think would have driven inflation in March?
Well, firstly, inflation remains extremely low. I think it'll stay around 1% or even slightly lower than 1%. A very mild pickup from last month's 0.4%. But basically, the year-on-year decline in transport prices will probably be much less this month than last month, and that'll be a factor that will push up the rate a little bit. But remember that 1% inflation is still extremely low. We're still seeing the benefits of a base effect from very high inflation over the past 3 years or so. Inflation has now normalized and is currently much lower than even the MAS is comfortable with. So really there is very little inflationary pressure at the moment, especially with the waning of transport and housing inflation.
Now, last week, the government did warn that core inflation, this excludes the volatile car and accommodation costs, is expected to pick up in the coming months. Why is core inflation expected to pick up?
Well, core inflation is picking up partly because the economy is doing better. Remember that for the last 3 quarters, headline GDP growth has been, real GDP growth has been over 5%. And consequently, we're beginning to see a little bit of wage pressure. Wages are beginning to rise partly because the labor market is relatively tight, and the restrictions on foreign workers are also contributing to a little bit of wage pressure. So that is really the factor at work, and consequently, we, as the economy continues to be fairly strong, we will begin to see a little bit of core inflation picking up. But core inflation currently at 1.6%, likely to be closer to 2% in the course of the year, but that is still pretty moderate.
Going forward, how would you read the inflation in car prices specifically after the LTA raised the quota of COEs for cars during the May to July period by about 42%?
Well, I think there will be a continuing downward pressure on COEs and consequently on the transport component of the CPI. We'll probably see a little bit of upward pressure in March, but as we go forward into subsequent months, the release of a higher quota will keep a lid on COE and car prices.
Let's talk about industrial production, PK. Our industrial production report is due this Friday. How do you think the country's manufacturing sector will perform?
Well, manufacturing has done pretty well. We are seeing a good cyclical recovery over the last 8 months or so, and we'll continue, I think, to see strong growth there. The Nodex numbers were slightly weak because of pharmaceuticals and because of some quirks in the electronic sector. But what we're seeing really is a broad-based rebound in petrochemicals, which is a new segment that is contributing significantly to both export and industrial growth. And industrial growth should stay strong, probably close to 8% for March, and will remain fairly robust in the next quarter as business expectations have improved in the manufacturing sector, and we're beginning to see machinery investment pick up as well.
Thank you very much, P-K Basu, Chief Strategist at realeconomics.com, joining us on the Bottom Line this morning.